for that. Now you're here for this, and it's loads of questions. And Claire says, I'm over 2 months in credit with OVO. They want to put my payments up again. If I cancel my direct debit and pay on the app, does it affect my credit score?
No, it doesn't, but I would caution you against it. So look, as long as you tell OVO you're cancelling your direct debit and changing your mode of payment, it won't affect your credit score because you're not missing any payments and you're in credit. Now, the first thing you want to do is try and get the direct debit, the monthly direct debits you're paying to be the right amount. Now, there are calculators online that you can use which are called Is My Direct Debit Fair, where you put in your usage and it shows you whether your direct debit is right or wrong. And I would suggest that you do that. Then you take it to OVO if it shows your direct debit's too high and you discuss it with them. 2 months credit is about right at this time of year. We're still in winter. You want to be in credit. The whole point of the direct debit system is used more in winter, less in summer. You pay somewhere in the middle. So when we're moving into winter, or it's at the start of winter, as we still really are, you'd expect to be in credit. The reason I say I don't want you to cancel your direct debit is if you move to payment in receipt of bills, and that's what most people do when they cancel direct debits, that's around 8% more expensive. You will pay around 8% more on top of the already huge rate to pay your bills. Now, there is an alternative. Did she say what company she was with?
OVO.
OVO. I think OVO may not do this. I think it's one of the two that don't. I'll have to double check that, but I'm pretty sure it's one of the two that don't. But for everybody else listening, this is important. The alternative to payment in receipt of bills, if you don't like what you're paying on direct debit and you want to, people tell me they want to take control of that and only pay for what I use, then if you can, you switch to variable direct debit, which is at the same price as monthly direct debit, so you don't have the 8% increase. And what that means is you either have a smart meter or you do meter readings each month, and then they just charge you your direct debit on how much you've used. Of course, that means your bills are going to be really, really high in the winter and much lower in the summer, so you have to manage your own cash flow. So unfortunately, our caller doesn't have that opportunity if she is with OVO. So your choice is between getting the direct debit right and moving into payment of receipt of bills. If you can, stick on the direct debit because you'll pay less in the long run. But if you really want to manage it, make sure that you talk to OVO and tell them you're cancelling your direct debit. Don't just cancel it with your bank.
All right, thank you. Wendy says, my son has gotten into a lot of debt over the last few years. He works full-time, so has an income, but he's buried his head in the sand. What is the best way he can begin to deal with it?
Well, what's always very difficult with a question like that with scant details is to know whether this is your son is somebody who could manage that debt, cut the cost of the repayments and get through it themselves, or whether it's time to draw a line under it, accept that any future borrowing for the next 5 or 6 years will be very difficult and go to one of the debt counselling agencies to seek help. Now, I don't know the severity of the debt. The 3 questions that I would ask that dictate it are, first of all, if you answer yes to any of these, then you want to go to a debt counselling agency. So the first question I would ask is, can you afford your minimum repayments? If you can't, debt counselling agency. The next question is, do you have more than a year's worth of salary as debt, not counting mortgage or student loans? If yes, go to a debt counselling agency. And the final question, if you can't sleep or you're having depression or anxiety because of your debts, I would go to a debt counselling agency. Now, what I mean by that is I'm talking Step Change, National Debt Line, Citizens Advice, Christians Against Poverty. As for what to do if you want to cut the cost of your debt, and for more on debt crisis, well, I mean, I've got an hour-long show on it tonight, which I can go into a lot of detail. So please do watch at 8 o'clock tonight. I'm going to be talking all the different routes that you can take there.
Just sticking with power and Grace says, can you please advise why my monthly direct debit for gas and electricity with Scottish Power has risen from £118 per month to £162 per month in January, despite being £41.78 in credit? My bill also states I'm on the cheapest tariff. I'm 81 years old and this increase is not in my budget.
So just let me get that. £41 in credit and it's gone up from 118 to around 140?
162.
160. Well, first thing to say is £40 is not a lot in credit if you've got bills of over £100 a month. I would say you would probably want to be more in credit. So that would indicate that why they may want to increase your direct debit. Second news, I'm afraid, is in October, energy rates went up by 27%. So you would be expecting to be going up to around £140, £150. Now, I don't know if there is anybody who could help you by putting your usage details, or you could do it yourself. I'm making a terrible assumption that you're 81 and you can't do it. I apologise for that. If you're online and you can go and use a calculator to see whether your direct debit is fair and whether it's right. But if I'm really honest and straight, those numbers don't sound particularly out of kilter, maybe 10 or 20 quid a month more than I would have thought. But if you're not that much in credit, which I'm afraid you're not, and I mean, the cost of energy has doubled over a year. It's doubled over a year. And that means everybody's direct debits are up hugely. And what I would suggest, if you can't afford this, speak to the energy company. Best time to call energy companies, mid to late afternoon. Don't bother calling in the morning. You won't get through in many cases. Call them mid to late afternoon. Talk to them. Tell them that you're struggling. I mean, the direct debit may be right, but there may be other help available for you. And that's what we need to do. But we talked about it on the show before. Energy bills have doubled. I am out of power to make those energy bills get any cheaper because you can't switch, you can't fix, you can't do anything. You know, it is an impotent situation for many people, and it's quite frustrating not to be able to help.
OK, thank you. Tony says, my partner and I are looking to start saving towards our first house. There are so many options for LISAs around. How do I know which is the best one to open? Or even if a LISA is what we need to save for our first house? We're both in our 20s and both in full-time employment.
Well, as long as you're planning to buy a house that will cost under £450,000, then a lifetime ISA is absolutely the right place to start. Because with a lifetime ISA, when you use it towards your first property, you will get a 25% bonus on whatever you've saved. You can put up to £4,000 a year in it. So if you put £4,000 a year, you get £1,000 added a year each year until you use it towards your first property. You can have one each. And they can both be used together as long as you're first-time buyers. So, you know, just in 1 year, you could put £8 in and get a £2 bonus. There is one rule that says you need to have it open for a year before you can use it to get the bonus on a first-time property. So even if you don't have any money, if there's anyone out there who may one day want to buy a house, or maybe your children have just turned 18 and they may want to buy a house one day, I would open a lifetime ISA with £1, even if you're not thinking about saving now, because that way you get that clock ticking so you can use it. You know, once you've gone past the year, you can use it whenever you want. The only problem with lifetime ISAs is if you withdraw the money for any other reason than to buy a qualifying house, or once you're age 60, you'll pay an effective 6.25% penalty. So you really want to make sure you're going to be using it to buy that house. I'm actually campaigning for some LISA rule changes. I'll be launching that later this week because I think the system needs updating and that 450,000 needs updating. As to which the best lifetime ISA is, well, if it's for a first-time property, you probably don't want an investment lifetime ISA. You don't want it in stocks and shares because they go up and down. You just want it in savings, and the best pair at the moment is Moneybox. So yeah, a lifetime ISA is good for you. Moneybox pays 3.5%. You should do a bit more reading because there are lots of I's to dot and T's to cross, but absolutely you're in the right start place. A lifetime ISA each is what I'd suggest, and the best pair at the moment, Moneybox at 3.5%.
Thank you very much. Very good. We'll see you tonight at 8. Thanks, Martin.